Hey everybody, this is Eric with Low VA Rates, and today we are going to talk about whether or not you can refinance your VA loan while you're in forbearance. Don't forget, it's also Friday. How can you forget it's Friday? I'm wearing red. You're looking forward to the weekend. Also, speaking of red, there is a follow or like button. It depends where you're watching us, but down to your right, please subscribe and follow us on YouTube so you see these videos the moment they come out. Anyhow, back to what we're talking about today, whether or not you can refinance if you're in forbearance or if you were in a forbearance. We're going to talk about all of that today. So during the coronavirus pandemic, many homeowners have been able to avoid foreclosure by entering into a forbearance program thanks to an act referred to as the CARES Act. C-A-R-E-S, right? The CARES Act. That was all in the news at the beginning of the pandemic. Well, what we want to look at right now is whether or not that forbearance that you entered will impact your ability to refinance into a VA loan or refinance an existing VA loan. We're going to talk about all of that, all right? So whether or not you're able to refinance your VA home loan while in forbearance is going to depend on whether or not the forbearance was entered into under the CARES Act or some other forbearance program. Most of the veterans that we're dealing with right now, either during the pandemic or now that we're on our way out of the pandemic, have all been related to the CARES Act. But there are situations where your forbearance may not have been part of the CARES Act. So we're going to talk about that. In normal situations, once you've entered forbearance, you will not be allowed to refinance while that loan is still in forbearance. However, when that forbearance period ends, you will have two options, okay? We're going to talk about those two options. Option number one, after your forbearance has ended, is to repay. Again, remember, this is if you were not under the CARES Act. Repay those missed payments, all of that interest that's owed, so that your loan becomes current, okay? And then, so bring your loan current is one way. Bring loan current. Once your loan is current, and you're out of that forbearance, you can proceed as normal. Now, the second option is you can have your lender submit to the VA for prior approval whether or not they will allow you to roll delinquent payments and fees into your mortgage. That requires VA approval up front. Now, remember, these two, okay, VA prior approval. This is if, both of these are if your loan was not in a CARES Act forbearance. You got to make that distinguishment. Did I say that right? Got to know the difference between the two. So now we're going to talk about loans that were in forbearance or are in forbearance as part of the CARES Act. I'm going to put not CARES Act here. And now we're going to talk about in CARES Act. I can't spell today. In CARES Act. We're going to talk about that right now. So the VA released a circular, and what that basically means, that's a cool way of saying the VA made it official to lenders like Low VA Rates. They issue these circulars, and they did this in June of 2020, and it kind of told lenders like Low VA Rates that forbearance under the CARES Act should not be used to deny a borrower, a veteran borrower, either a cash-out refinance, a streamline refinance, or a purchase loan. Basically, it should not negatively impact your ability to utilize your VA home loan benefits. And I want to make a statement here. What was so cool about the CARES Act, along with a lot of the other bailouts the country gave us, you weren't supposed to have any negative impact on your credit report. It wasn't supposed to hurt you. This coronavirus, debacle was so bad that it rocked the world, specifically here in the United States on a financial aspect. The CARES Act was specifically designed so that it did not negatively impact you. And the VA went along with that and said, look, we don't want our veterans to not be able to take advantage of these low interest rates that came as part of the pandemic. And so they just clarified that in this circular. Okay, in addition, the circular also told lenders with automatic authority, that's Low VA Rates, we have automatic authority, we've talked about that in other Red Friday videos, that we did not need their VA prior approval. Okay, so back here, no VA approval needed. That letter basically said if you are an approved VA lender with automatic authority, you can make the call. You don't need us to do it for you. And also they said on Earls, interest rate reduction refinance loans or streamlines, what was very cool about this, interest rates went way down during the pandemic. And so almost everybody that had a mortgage was trying to refinance. What was cool is the VA even came out and said, look, you can use the streamline to pay off all of the past interest and all of those mortgage payments that you put into forbearance without approval from the VA. The streamline could allow you to add that money in. And that's not normal for a streamline. Normally on a streamline, you can't add in past due payments without VA approval. You can't add in, interest that's in arrears. That's not allowed. But under the CARES Act, in this kind of emergency situation we were in, that was allowed. Now, in both of these situations, you still have to think of a couple of things. The borrower, that's the person borrowing the money and being on the loan, you still need to provide an explanation or a reason as to why you went into forbearance. And you also need to prove that you're no longer facing that same financial hardship. So for example, let's say you were in the concert industry. Concert shut down. All the big arenas shut down and you were put on furlough or you were laid off. And so you went into hardship, right? You got into forbearance under the CARES Act. Now the economy's opening back up and you want to take advantage of the streamline or you want to do a cash out refinance. You're going to have to prove that you're back to work and you don't anticipate falling back into hard times. Okay, number two, you still need to meet all of the other standard requirements for the type of refinance you're doing. For example, net tangible benefit, there might be a seasoning requirement. I'm going to talk about that as I wrap up this video in just a second. Recoup requirements, everything else is still standard. There's no exceptions to the existing rules. So this last point is super important. I want to continue to focus on the streamlines or the Earls and the seasoning requirement because we have a lot of veterans that are being impacted by this right now. So I'm going to clean up my board real quick and we're going to talk about here. I need about another 2 minutes of your time. Pay attention. This is important. Okay? It took us lenders hands-on experience to figure this out because there was a lot of confusion after that letter. So we're going to put Earls seasoning. Okay? Now we've got a lot of videos on seasoning. Ultimately, what that means is you have to have made 6 consecutive mortgage payments before you can lower your interest rate through a streamline. And that actually has the same thing to do with a cash out. Cash out loans also require seasoning. But here's the deal. Let's say you're a borrower. Option number one is you got into your loan, I'm just going to call it, in June of 2020. That's when you got your loan. And then all of a sudden, you got laid off because of the pandemic, and in August, you went into forbearance. You know what? I can't spell today. I don't know what it is. You went into forbearance under the CARES Act. I can spell CARES Act, right? So you went into forbearance under the CARES Act in August. Now, in, what month is it? It is, man, I'm struggling today, guys. It is May. It's almost June, right? Now in May, you're coming out of forbearance because you're back to work. Everyone's getting vaccinated or getting whatever they're doing. I try to stay out of politics on these videos, but now you're good to go. And you're thinking, wow, from June till August, there's definitely been seasoning. There's definitely been 6 months. I'm going to call up low VA rates and I'm going to refinance to these low interest rates. Here's the problem. You made a payment in June, that's 1. You made a payment in July, that's 2. You didn't make your August payment. Maybe you did. And then you went into forbearance. Here's the problem. Even though that circular from the VA says that you can refinance and roll in all of this interest that was in your forbearance, there's been additional guidance. Your seasoning starts over because it is 6 consecutive payments. They weren't consecutive. You made 3. So what we have learned through experience is now you're out in May of 2021, you're out of forbearance. You've got all this money over here that you owe the lender because you haven't made payments since August. We can roll that into your Earl. However, before we can do the streamline, you've now got to make May, June, July, August, September, October. You have to make 6 consecutive payments. That's now putting you at 9 total payments on this mortgage, but the law states it's 6 consecutive payments. So that's the part that was confusing to lenders and to veterans. The industry is kind of now on board with this, and there's much more clarification. There's much more clarity on this. So the CARES Act was awesome. The streamlined loans are awesome. You veterans are awesome. And if you have interest rates anywhere in the high 2s or 3s, you should consider a streamline. But if you were in forbearance at any time under the CARES Act, make sure you make 6 payments either before having gone in. I forgot to mention that. If you would have made your full 6 payments, however many, up to 6, and then went into forbearance, and then you come out, you're good to go because you kind of seasoned before you went into forbearance. But if you did not make the full 6 prior to forbearance, those are all for naught. You now have to start over and make 6 after coming out of forbearance. Final thing I'm going to say, I went way longer than I normally do on these Red Friday videos, but this is happening in real time. We see it every single week here. You must also make sure your lender officially takes you out of forbearance. We've seen veterans that have started making their payments May, June, July, but they never told their lender, close my forbearance. So you got to get a hold of customer service and say, I'm done. Get me out of forbearance. Thank you for watching. Sorry I went a little bit long today. Tune in every Friday for awesome videos just like this. And make sure you're willing to, you got to call us. You can chat with us online. You can hit us up on our website. We're here waiting to help you out when you're ready. Thanks for watching.